Markets are unpredictable, volatile, complex, but your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum, to London's open surge, to New York's high volatility action. We decode every move live. Get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts. We crack a few smiles too. Only on Hola Prime TV. This is more than content. This is infotainment and beyond.
Morning.
What's going on, Coach Alex? How you doing, boss?
Nothing. Yeah, very good, thank you. How are you today?
Wonderful. Thunder from down under. That's Coach Alex, everybody.
Absolutely. I'm excited to get this trading week started.
Yes. We can wash last week away and start anew. That's the best part about Sundays. Sundays here in the States, I should say. Monday for you.
Yep. Monday
yeah,
morning.
what a week it was. What a week it was, my friend. I was, what'd you have going on this weekend? What'd you do? What were you up to?
Funnily enough, we went out for dinner, got a bit of food poisoning, so I've been in bed. I've been very ill, just relaxing, recovering, recuperating. That's been me. So unfortunately, I don't have much to report. It was a fantastic meal. Was I happy that I had it? Not particularly at this point, but hey, at the time, I'll always go for a bit of Mexican. But in this particular time, those tacos, they were not good. They were not good. But that was me. What was up with you?
So bad Yelp reviews were passed out. Oh man. Yeah, that's sad to hear because Mexican is my favorite dish, one of my favorites. Yeah, we just got a brand new Mexican joint down the street from us, about a half a mile. So, definitely it was really nice and super cheap, to be honest. I couldn't believe how cheap it was for being so good. But no, I just got into a little bit of hot tub action Friday evening here at my house. Went out with some boys, went to have a couple pickle shots. So, yeah, just did the thing and then just kind of relaxed the rest of the weekend. Kind of caught up on my sleep a little bit. It's difficult on the weekend just to go to sleep like a normal person when you're a night owl anymore. So, yeah, I just did a lot of catching up on sleep. It was a good time. But, no, I was just kind of going through my alerts, deleting a bunch of old alerts earlier and adding a few new ones. And really, I don't have a whole lot this week so far. But yeah, with last week, we had obviously the 25 basis point cut here in the States, and we had a couple good pieces of news. I'm actually going to go pull that up as we speak. Back end, if you don't mind, just pull up my chart, and we'll just kind of go through the week that was and the week that is upcoming real quick. But yeah, this week should be a lot lighter, thankfully, as far as the news goes, as far as the U.S. news goes, I should say. So yeah, as soon as I get my chart up, we'll kind of go through the dollar here real quick. And as far as this week goes, being a slower week for the U.S. news, I love it. I love weeks like this. We had all the noise and the racket last week, have a little bit slower week this week. So pure supply and demand, which is what I like to trade. I mean, this is usually when it works the best, when you get away from all the major news. Just let the couple days of price action form after big news like the NFP or like obviously the interest rates we just had, and just kind of let a trend form and jump on and ride it. So that's what I really like. But yeah, I mean, as far as last week goes, we had the retail sales number here in the U.S. that came out 3 times better than expected. We had the jobless claims come out to be pretty good, about 9,000 less unemployment claims. Get that word out. That was good for the dollar. And then obviously we met expectations on the 25% cut for the rates. So, with all the bad news we've been having of late with the dollar, that was actually a welcome week. So does that mean it's going to completely turn around and go north? Maybe first. I mean, I could see it for a short period of time, but I mean, not overall, not yet anyway, because we still only have exceeded expectations on 44% of all these reports that have come out lately. All the jobs data, the inflation data, the growth data, et cetera, et cetera. So slight rebound. Yeah, I could see that over the first few days, handful of days. But then ultimately, yeah, I mean, I wouldn't be surprised if it turned around and started making some more lows, which is why gold is still pretty close to the top of my buy list right now. Just waiting on a little bit of a discount, but yeah, that's basically it. I got a few alerts set for gold and a few other things. Back end, if we can get my chart up. Just 1 minute. Okay, just waiting on our chart to come up, but yeah. So that's a little bit about the dollar. What's that?
Are you just going to be primarily looking at gold then coming up for this week, or?
No, I still have a handful of currencies I'm looking at. But yeah, gold isn't as high on my list this week as it has been. I mean, it's been at the very top of my top setups list for weeks now. But as far as right now, not necessarily, not really. I'm just looking for a deep discount on gold, so I'm not in a hurry to go buying it. But yeah, this is the dollar. Like I said, we've exceeded expectations on 44% of all the reports that have been released. But it was a good week last week. So obviously, anytime you guys see a date that's in yellow, that's within the last 7 calendar days. So obviously, we just had the 2, the retail sales, the jobless claims. So yeah, both bullish for the dollar, bullish for the stock market as well. The stocks are over 56%, looks like. But the dollar, albeit a good week, still overall, we had a lot of bearish releases over in the month of September. So, it's not necessarily a rush to go buy the dollar, but I do have a couple pairs that I'm actually keeping an eye on, U.S. dollar pairs to possibly buy. But and then as always, I just kind of go through the COT report first thing on Sundays just to get an idea of where the banks are long. So they still are long gold by far, higher than everything else. Silver is third. Now Nikkei, they had a pretty big increase, and I'll get to the weekly change here in a second. But yeah, the Nikkei has jumped up there now. So a little bit of, just kind of completing the safe haven circuit. You got gold, you got the Japanese yen, you got silver, and yeah, they're pretty short on a lot of the currencies. I mean, net short, I should say. The Canada dollar, the Swissy, the Kiwi, the Aussie, and the dollar even. So yeah, currencies overall still, they're just not looking that great. They're not looking that great. Actually, I'm going to pull up the weekly COT here in just a second, but this is kind of the up to the minute speed gauge, if you will, the global economic surprise score. And we see there the dollar at 44%. The strongest currency right now, as far as just simply beating expectations on reports, is the British pound, sitting there at 60%. But that's it. Everything else is middle of the road to crappy, to be honest. I mean, I don't know what other word I can use, but you got the dollar down, you got the New Zealand Canada dollar tied for second worst, and then you got the Swissy at the bottom with 17. So anytime you add all these together and have a combined average of like under 40%, it's just not great. So it's no wonder the metals have been doing really well lately, and the currencies haven't. So just a couple, 3 short weeks ago, I mean, we had the overall global average over 60%. So it's kind of flipped on a dime over a very short period of time. So, still kind of iffy out there. So just looking at the week to week, though, this is what I love to show every Sunday and Monday, even on Forex Fire. There again, we can see the Nikkei had a huge increase last week. So they increased their net long percentage by 13%. So that's a big number. I mean, their net long to begin with, 9,000 contracts to 2,600, actually 10,000, almost 10,000 to 2,600. And then they just increased that even further. 1,800 long added. And then they also got rid of 1,500 short contracts. So this is the futures market, just so everybody is clear on that, right? This is the big banks and institutions, what they're doing in the futures market. So, yeah, huge increase in the Nikkei. Now, the Nikkei is not on my watch list just yet. It's still in kind of in the neutral camp, but I'm still going to be looking at some demand zones on there just to see what's going on. Because if the big banks are buying that huge of a percentage, they must know something we don't. And that could have been prep for the interest rate decision that came out. I mean, this report's accurate as of last Tuesday. We obviously have the interest rate report later in the week released. But yeah, you can see right there, your home currency, Aussie dollar, that was the leader as far as the currencies go, 8.16% increase. Yeah. Now, they're net short overall, 91,000 contracts to 40,000 long. But that's a pretty good turnaround. I mean, anytime you get something over 5%, in my opinion, is pretty significant. And then the pound right behind it at a 7% increase. So all this I kind of consider middle of the road until you get all the way down here to, the S&P. So the S&P 500 and the Russell 2000 and even the Dow at the bottom, look at that, 16%. So stocks did not, the U.S. stock indices did not have a good week at all. Where was the other one at? NASDAQ, S&P. Okay, so yeah, every single one of them were sold off. So that's a pretty risk-off move if you ask me. All 4 indices got sold off and sold off heavily. It wasn't like minus 2%, minus 1%. It was minus 16%. And the dollar down there with it, minus 10%. Yeah. Yeah. The Russell, 4%, S&P, 3.3. Okay. And then minus 3 points sit on the NASDAQ. So, yeah, the last few weeks, man, the COT report's been kind of average. It's been kind of giving mixed signals because there have been like 2 of the indices increased on the net longs. The other 2 would be increased on the net shorts. So, but yeah, they just had a total meltdown last week. Crazy.
Yeah.
So,
absolutely.
But yeah, the news. So it is kind of funny. You got the Aussie dollar as the top currency bought, but then you got the Kiwi as the most sold off currency. That's an interesting.
How does that work?
That's an interesting dynamic. You would think they would be fairly close, but having said that, the Aussie New Zealand currency pair is actually, I believe, the top setup. So that makes total sense. Selling off the Kiwi, buying the Aussie. So we'll take a look at the top setups. But yeah, just at a glance, that's kind of what we're looking at. Bitcoin, a 0.5% increase. And then gold was about a 0.68%. So yeah, just kind of like I said, kind of middle of the road as far as the COT report goes on that. But yeah, the biggest takeaway, all 4 indices sold off. And then more safe haven.
I've got a question for you then, Tiger.
Yeah.
So if the Australian dollar has been massively bought and the New Zealand dollar has been massively sold, if that happens, say like if it's Great British Pound or Euro USD, it's the same sort of thing. Does that mean, in your experience, and you might not have done this, which is okay, but would it set up any divergence plays? Are we more likely to see divergence between these 2 pairs that could have a few more setups along those lines?
I mean, I would just strictly look at that pair itself. I mean, I don't really play a whole lot of divergence pairs type plays. I mean, I just look at the divergence in the individual currencies. That's really what I look. That's why I love so much. That's why I love so much just paying attention to this thing right here. mean, you see right there, Aussie 57%, middle of the road, but slightly good. And then you got the Kiwi at 25%, which is not good. So this surprise score in itself can be a watch list just by simply pairing up the strongest currency with the worst currency, right? Because you're basically buying economic outperformance and selling economic underperformance, right? For more of a longer term play. It may not help as much like with the shorter term scalps, kind of like what you do, but as far as the the short term, mid term swing traders, especially position traders, I mean, this is a really good thing to look at. And I'm traditionally a little bit of a shorter term swing trader anyway, so that's why I personally pay so much attention to this rather than, if I was just a scalper, probably not so much. I mean, I'd still want to be aware of it, but I'm not gonna hang on every move that this does as a scalper or short-term intraday trader. But no, as far as divergence plays, actually Coach Richard would probably be a good one to ask about that, because I do know that he kind of looks for divergences on a couple of the indices, and a couple of the futures traders do actually on the future stream. So they'd probably have a better answer for you than I would as far as that goes.
Fair enough. Easy.
But there we go.
I should ask.
No, it's a great question. But there you go, right there, Aussie New Zealand. It's the second highest, so it's a plus 11. As always, for everybody in the chat, anything that's a 5 or higher gets a bullish score. Anything -5 or less gets a bearish score, meaning I'm not just going to blindly go out and buy and sell that currency or that asset, but I still got to go time it on a chart, right? Still got to find a technical reason to get into it. So I have a fundamental and a sentiment reason, fundamental analysis with all the economic data, sentiment analysis with the big banks and institutional positioning, paired with the retail sentiment, right? Are the retail traders net long? Okay, that's a contrarian signal to sell. Are they net short? Okay, that's a contrarian signal to buy. Unfortunately, retail traders are most often on the wrong side of the play. So, they're chasing the breakouts and the momentum plays, but they're leaving their liquidity in the path. They're leaving their stop losses. That's what the banks need to go and feel their orders to go the opposite way. So, pound New Zealand number 1, Aussie New Zealand number 2. I mean, the common theme is selling New Zealand here. Again, it's the war. It was the most heavily shorted currency on the COT report, so it makes total sense. And that's why these are getting +2 scores, meaning pound net was net long, New Zealand was net short. Same thing with Aussie, so on and so forth. So, and just real quick, hello to Sukwinda, Jaime, Tanaka. How is it going? We got a poll question. Will the next rate cut come in October? Yes, in October. Not until December. Depends on jobs data, or it's too early to bet. So let's see what you guys and gals think about that. And then that's a good thought. I'll pull up the CME FedWatch tool here in just a moment and see what it says. Samuel Trades, hello. Samuel from Nigeria. Welcome. Howdy, partners. That's right, Coach James. Yes, sir. All right. Let's do that. Let's actually take a look at the FedWatch tool, see where it's at. I know last week we were expecting an October cut, but, things change quite a bit. Very dynamic. Okay, so October 29th, 91% chance, 92% chance that we will drop another 25 basis points, and 8% that we will stay the same. So that's, that's basically the bond market predicting that. So let's go look at December. So December has another 25 basis point. Oh, wait. Hold on. Let's go back. October was 375 to 400. Okay. And then December. Okay. So they're projecting a 25 basis point cut in October 29th, and then another 25 basis point cut on December 10th. So that's just the projections. The December projection is 80%, and then 18% they'll keep it the same, it looks like. So that's what the bond market thinks, but what do you guys and gals think? Let's see what you say to that. Awesome. Man, did you have any plays at the moment before I go into some alerts I have set?
I can definitely bring up my charts. Just give me one moment while I share it with the back end here. And then we can get started. I'm more than happy to do that. Just give me one tick.
Absolutely, because I have quite a thin list at the moment. This is like half the size of
awesome.
Yeah.
No worries. Well, back end I am sharing. So whenever you want to switch it over, we can have a look through here.
Just
get it done in a second. I'm sure.
We just had a nice little rain shower here.
Same, but it's hailing.
Yeah. I got to enjoy these rain showers while I can, because it's going to start getting cold here in the next probably few weeks. Couple weeks.
Yeah, I'm excited for it to get warm. Just let me message the guys.
I'm gonna be sad, and I might have to go to Australia, go to the southern hemisphere.
Yeah. How cold does it get where you are in the winter?
Well, it's really only super cold for like the end of December through like early February. That's like the coldest part. And it gets down to usually like it'll average about 30 Fahrenheit, or maybe like lower 20s in the coldest, I guess. But we get negative temperatures as far as Fahrenheit goes. We'll get negative temperatures for probably like a week. And then it'll just start to slowly grind back the opposite way. But yeah, that's when I always threaten to move to Florida or back home to Tennessee or Mexico or something.
Yeah,
I can't stand it.
So you can hang out with Coach Michael. You and Coach Michael could be hanging out down there in Mexico.
On the beach? Heck yeah.
How good. Maybe you just go ahead and I'll be able to do it in a second.
No, that's fine. So just kind of going through some of these alerts I've got. So we got pound New Zealand, Aussie New Zealand. Looking at the pound New Zealand, so we did recently bump into a overhead supply zone here. Well, it's been a few weeks at this point, but point is we did hit one. So we hit into that, and it slowly decelerated back down to this lower demand zone, and we've since gotten this push back up. Now we had a really good spike there in the middle of it, and then just a slow taper down. Oh, looks like they moved it actually to your screen.
Wait,
no worries. I get
that. That's all right. That's all right. I'll take over. It's fine. So I've got a few things that we're actually looking at here. Now, this is going to be a little bit different to what I'm normally showing, and I will be going back on the later sessions today to do some scalping. But at the start of them, I've been given the go-ahead, the all clear to bring another strategy in. Obviously, I trade more than one, as do quite a few traders. And this is more of my day trading / swing trading kind of strategy through here. So it will be a little bit different. Now, what it's based on, I mean, we can go over, and I think it'd be better if we go over it in my later sessions, just because we'll have more time through here. But there's a few different things that we can look at this current point in time. Now, even though Tigers had that amazing news that we brought out with Euro AUD, you may see me making some plays that might go contradictory to that. Again, it's just going to be slightly different in the case of, well, for anyone that's listening through here, it's all about data. It's all about data and data and data for this strategy, which means that I've gone and I've back tested it year after year after year. This year, for this particular strategy, we are already at 45% returns for the year for what this strategy has done. So that's pretty phenomenal going through here. So you will see some things, maybe some trades that you might know aren't the best. But as I say with my last strategy, my scalping one and this one, it's all about just following the data. If the data says hop in and all my entry rules are met, I'm going to do it regardless. I am going to hop in blindly on the hopes that, well, the last 4.5 years that it's been working, it's going to continue to work now. Of course, we have to make some changes every so often. Otherwise, it's going to be stagnant. But you might see that and you might think, why is Alex hopping to a trade here? When maybe some economic news or something along those lines says to maybe stay out. But we'll get into that now. However, this here is something that I am already in. So this is a trade I'm in myself, and you can see that there are a few buys around here. So if I just actually turn up my own screen so I can see slightly better. Cool. What I like to do with this trade is trend trade. So you'll just see me basically following these large continuations through here. Yes, obviously we have Euro AUD. And yes, this was from a Friday trade. Obviously, I'm not going live. It's a very, very similar to my scalping one in where I place my stop losses. I will find the last low. However, because I am not hopping into a scalping market, I'm always going to give my stops a little bit of extra leeway just to take into spreads. Now, it obviously depends on the broker that you're using, what the spreads are going to be, obviously the market that you're hopping into, London, New York, whatever it might be. But I usually, as a general rule, like to find the last low and then add roughly 6 pips on top of that. So if this is 38 here, what I would do is just move it to a 44 pip, roughly. That's what I like to do, putting in here, just to cover that spread, just to make sure that, hey, you know, if it does come all the way down here and that's where our stop is, spread might take us out. It might take you out, it might say, hey, there you go. I don't really want to be doing that. And a big difference is that I always go for a 1 to 2. So currently in this trade going through here, yes, it's not looking the best at this current moment in time. I am actually looking for it to move closer to break even so I can close this trade out. Right now, my stop is sitting somewhere around here. Big key takeaway for this one, and this is really the only trade that I've hopped into at this time, hence why I'm concentrating on it, is when it starts to range like this, forming rather unconventional double bottoms and double tops, as we can see through here. I know that maybe the trend is starting to flail, it's starting to slow down. We're probably not wanting to, be as impulsively bullish as we can see through here. Maybe it's pullback time, I don't know, but a range is not the continuation of a trend, not for this strategy anyway. So if you ever do follow along in the future and you're in a trade and you see it start to range, it's always a good play just to move your stop loss along. And as soon as it gets near that break-even area, you can either hop out or just continue to move your stop loss up and up and up. Because there's always the chance that it does decide to break through. Absolutely. You don't have to hop out straight when it hits break-even. You can just follow it along with your trailing stop. Now, usually I'll have that somewhere, again, around 8 to 10 pips trailing the market, something along this. It will be tighter, absolutely, but should it have got up here, I either want it to continue to go up or I just want to be out of the market. So right now I am sitting here slightly minimizing the loss if it does come back around. Remember, the markets have really only just opened, so I'm not expecting a lot right now. But this is a trade that we're in here. In terms of really everything else, I'm not going to be scalping this early in the morning. It's not London. We have no volatility in the market whatsoever. There is no point for me hopping in. But in terms of really everything else that I can see through here, no, I'll be staying out due to various reasons, either like consolidation or news or something along those points through here. Just let me double check with everything. Yes, I'm not going to be hopping in to the markets. It's just this Euro AUD trade that we have in here. So I'll be waiting. I'll be watching, I'll be seeing maybe not the most exciting thing, looking to actually hop out of a trade rather than to hop into it necessarily. So I wouldn't advise that you guys follow along. Probably should have said that earlier. But this is the play that I'm in right now, and this is what we're looking at. Of course, if you do catch us later with Tiger on again, and I believe it's Coach Richard, I will be scalping as well. And hey, maybe I'll have an update for you. Maybe I'll close the trade out. We'll have to see through here. But that's currently what I'm looking at. The rest of the trades, volatility isn't there. It's consolidating, it's ranging, it's not looking good for this trend trading strategy right now. Might pick up later in the week, might see something pop out later today, but I will have to wait and see. But for now, in kind of a small roundabout way, unless something picks up on those scalping markets. Even though I just said I'm not really looking at them right at this very point in time, I'll keep my eye on them to see what's going on. This is really it. So with that being said, Tiger, do you have any questions, or do we have anything in the chat? Oh, wow, we actually have a load of messages in the chat here. All talking about rain. Yes, rain is fantastic. The environment.
Oh yeah,
that's hilarious.
Greenbacks too. That's right. No, I was just gonna say, yeah. I mean, tomorrow, or no, never mind, not tomorrow. Tomorrow's so Tuesday. I mean, not sure how many days is that trade? How many trades are you prepared to keep that? I'm sorry. How many days are you prepared to keep that trade open? Is it just like a couple days or something?
Yeah, probably being between that 2 to 3 day period is the sweet spot. I'd love for it to get done earlier, but yeah, 2 to 3 days is usually how long these trades run for.
Yeah, well, I was just asking because we don't have any major news tomorrow, Monday, but as far as Tuesday goes, they're projecting the Euro PMI data to actually be good. So previous 48.8 on the German flash report, and they're actually forecasting for 50. So they're actually forecasting to go to expansion. And then as far as services go, 49.3 was the previous. They're projected 49.5. So a modest increase there. We all know that economists are like meteorologists, and they're wrong quite a bit. But if somehow they were actually accurate, then that could definitely potentially boost that trade, if you were waiting a couple days. And then the Australia CPI data comes out Tuesday night, which would be your Wednesday morning. So they're projecting that to be a 0.9% increase as well. So that would actually benefit the Aussie. Just a couple potential things that could either help or prove you wrong right away, right?
Yeah, very quickly. But I'm used to that. I'm used to that scalping, being right or wrong very quickly.
Well, I would rather be wrong. If I'm going to be wrong, I want to be wrong right away. I don't want to be in a trade for 2-3 days and it just slowly grind down. I'll often get out of trades if it's dicking around like that. Like I don't want to tie my capital up in something that's going sideways. But if I'm going to be wrong, wipe me out in 30 minutes. That way I can go focus on the next move. So, but I could potentially help you out on that for sure.
Amazing.
Faux show.
We'll have to see. We'll have to see how it goes.
But yeah, I mean, listen, when it comes to like when I pick my trades based off my top setups, always keep in mind for everybody, this is my longer term plays. I'll still go down to a 5-minute, 15-minute time frame to scalp, quote unquote scalp 5 minute, 1 minute, or even short term intraday trades, counter trend. I mean, I'm not opposed to that because if I see a shift in the momentum, right? If I have a bullish reason to buy something, and let's just say the speed of the candle starts to slow down, and then you all of a sudden get a correction that's way sharper than the recent move is up. Well, that could be a shift in momentum. So Yeah, I'm not opposed to selling that on the way down to the ultimate higher time frame demand zone I want to go buy from. So, yeah, it's just a matter of staying flexible. I should probably clarify that more often, but yeah, I will. I'll do that. I mean, I did that on Bitcoin the other day, where
Yes.
I have a demand zone underneath I want to buy from a higher time frame, but no, I shorted it on the way down. I'm not opposed to that. I'm not trying to be right or wrong. I'm just trying to make money, right?
Yeah.
So you could buy and sell the same thing, still be right. So hope that clarifies things on that.
Absolutely. Yeah. You know, you're very good point. Very good point.
Yeah.
Absolutely true. Yeah. I think you can do both. Cool. So, I guess with that, Tiger, I think we've only got like 20-ish minutes left. Do you want to pop on your charts and have a look
Sure.
at your?
Yeah. Yeah, we'll just take a look at a couple of my alerts set. Yeah, this hour always flies by, Alex. It goes quick. And yeah, Tanaka, Sam, SP King, everybody else, if you have anything specific you'd like me to look at, like us to look at, just let us know. Here's the deal. I've only got, as you can see, I've got 8 alerts on the right-hand side. That's it. That's all I got right now. So yeah, just feel free to let us know if there's a market you want us to look at. This is the thinnest I've had my alerts in a while. I've been having like 25, 30 alerts for quite a while, but everything kind of changed with the interest rates, and I knew it would, but it just kind of thinned out my list. It pretty much brought everything back to neutral when you incorporate all the data, right? So, but yeah, like I say, my top 2, Pound New Zealand, Aussie New Zealand, and then I'll also keep an eye on these pairs where I can sell the yen. So Aussie yen, Pound yen. And then again, there's a couple dollar pairs, dollar CAD, dollar Swiss. So I don't have alerts on about 4 or 5 of these just because I don't really have a good demand zone or a supply zone. Or it's just way too damn far away, right? But yeah, just taking a look at gold real quick. We'll just take a look at the put to call ratio. So when it comes to the put to call ratio, this is basically your options market. So here's what I found interesting. So I still have a bullish reason to buy gold, and even more of a bullish reason when I look at the put to call ratio, because there is a extreme fear out there right now for metals, believe it or not, a high put demand. So the options market is net putted, if that makes sense, right? You got your puts and your calls. Puts means that they bought bearish bets, right? They placed bearish bets. So kind of think of this put to call ratio as a chart. If you see the chart going up, then that just typically means it'd be a better idea to buy versus sell, right? But that's the options market being on the wrong end of it, right? Well, I don't want to say the wrong end, but that's just where they're net long. And as we know with retail sentiment is best to be used as a contrarian signal. 90% of traders lose 90% of their capital within 90 days. That's just kind of the way it works, right? It's a horrible stat, but we're not charity here. We're just here to make money, right? We're here to take the liquidity. Mm-hmm. All trading is taking money from one person's account, putting it into your account. It's as simple as that, right? It's a cutthroat world, shark-infested waters, but they put their money on the line, right? So we're here to teach how to avoid being the 90%, right? So just keep that in mind. Contrarian signals will keep you out of bad trades. So yeah, just looking at gold, yeah, again, I mean, that's a bullish reason to buy. And then the other one I wanted to look at was silver. Look at this put to call ratio. This is obscene. Look how scared they are in the silver market. Okay. Again, high put demand. That's like twice the legal limit, right? That's DUI territory. That's take your license away territory. Put you in the clinker for a couple nights territory, right? So, and then the other thing with that, I mean, that's your put to call ratio. But even if you look at the retail sentiment, I'm actually on my other chart, just going to take a quick peek over here at the metals market. Gold, silver. So they're net short on gold, 94.5%. And silver, there must be an error with the algorithm because it says 105% net short. And I know that's a typo because that's not even possible, right? So the point is everybody's, well, as you can see, they're just super scared of the metals market, right? So that's yet another reason, unfortunately, to be looking for cheap places to buy these metals. I mean, silver, there's a daily demand all the way down here. There's a smaller time frame demand inside. I believe that's a 4-hour. So that's one area I'm keeping an eye on. You got this whole big up move, this gigantic move over the last handful of weeks. And then you got some zones up higher up, but ultimately the ones closest to the origin of that strong move are going to be the highest probabilities. Now, it may very well grab a zone in here and just continue upwards, right? So it's just kind of a risk you got to take. Do I maybe want to risk a partial position in here? If not, I get stopped out and I come down to a higher quality, right? Well, except you can't because this one's already been touched. So that's why anytime you guys see me, this is the color I draw for all my demand zones. Okay. Anytime you see a light green, that means it's already been touched. Okay. So this one's already been wicked into. And as you can see, that zone won out. That zone pushed price to a new high. Just looking at the silver price here. Well, if we know that this area pushed price above this swing high, well, then we need to focus on this leg here to see if we can find a demand zone in there. And we've got one here. Okay, here's a 4-hour demand all the way down here. You got an efficient market all the way through here. You don't have any gaps. You have a gap here. Let me just delete that box out of the way. You have a gap right here. Okay, from the top of that candle to the bottom of that candle, you got a gap. So that's the closest gap to the origin of the strong move that we already know was bounced from a demand zone. So there we go. I mean, there's a great play option right there for anybody that's trading silver. All right, you got a contrarian signal in the, as far as the options market, right? There's a potential play right there. That's one that I'm going to be keeping my eyes on. Now, silver isn't currently on my bullish watch list, but silver is the little brother of gold, right? It doesn't always repeat, but it does rhyme. So that's one option I'm going to keep open right there. Now let's go back to gold for a second. Okay, so this was pretty much the same story. It kind of bounced off of a demand over here and started going up. So I'm going to keep an eye on this most recent up leg. This is a 4-hour time frame, but I just need to go down time frames until I find a gap. And this is all efficient market. Uh-oh, I got an inefficiency here. Top of that candle wick to the bottom of that wick, there's your gap. And then there's your demand zone underneath. I turn that off for a second, right? You got a doji candle, a little bit fatter of a doji, but a doji candle, you got wicks on either side. Then you got a big push up with some volume increase, some volume spread analysis, expanded range candles. You broke a high. Be even nicer if you broke that top high. That'd make it even stronger, in my opinion. But that's a move. It's a potential move right there. So that's an alert I'm going to have set for this week. And I believe I already have an alert. Okay, I do. So, yeah, here's another gap. Here's another gap up here. Now, why would I not want to use this one, this demand zone? Well, first of all, let me draw it out. Okay, so that's my demand zone, and then there's my gap. So I got 2 demand zones with 2 strong gaps. Why would I ignore this one? Because the highest probability zone that is going to get the bounce is typically closest to the origin of the strong move itself. So that's down here, right? Now, will this zone work out? Possibly. Will I keep an eye on it? Yeah. I just won't be putting a full position on. I might limp in. I might test. I might use this as a test zone, right? Maybe I do a 0.33% of a normal risk, right? But I'm not going to put a full risk on a zone that's high up on the curve. This zone is low on the curve. So that's going to be my favorite spot. See, this demand zone is in the bottom third of this swing low to swing high. This one up here is at the top. Well, kind of diddling in the middle, right? It's kind of in the middle, but kind of at the top as well. This zone is at the bottom, so that's going to be the highest probability zone to take. So I'd be okay putting a full risk on this down here. Maybe a third of a position up here. Again, just to test it out, especially with gold and silver, because, well, I've missed so many entries on gold all the way up through here, just missed because price just wasn't coming back to my zones, right? It was just going parabolic. What the heck is that? Oh, that's an old, okay. Well, I think it would make a little more sense to wait on the higher probability zone of late, because you kind of have a big sideways price action. If we look at this back on a daily, there, get that out of my way. All right, I got too much stuff. Oh my gosh. MC Hammer pants. That's yeah, we were talking parachute pants on Forex Fire Friday morning, so I had to show the youngins what MC Hammer looked like with the parachute pants. Yeah, and you had all the different colors, the flavors. Yeah, it was a hot ticket back in the day. I never had these. I was too young to get those, but I do remember people wearing them all the time. It was quite comical. So yeah, that's sorry about the side note, but that was kind of funny to point out. But yeah, over the last couple of weeks, the like I say, gold, XAU USD, or even the futures contracts on the futures side of gold, it's all just kind of going sideways. So, for this reason, I'd be happy to wait for the deeper retracement. So I probably won't be taking that higher up zone. That's just me. I just want to get in as cheap as I can. You got all these parabolic candles right here. That's a very, very strong move. I'm just going to delete these other boxes down here so I don't get confused here. Okay, there was another supply zone that hit nicely the other day. But yeah, this is the play, boys and girls. I mean, as always, we're not a signal service, right? We're not financial advisors, but just like with anything, just like going to the shopping mall and buying your coat, right? I'm going to be having to go buy a coat because it's about to turn winter here. Well, if I go see a coat that I like for $250, I don't want to pay $250. Maybe I'll come back in a week. Maybe I'll see if they discounted it down to $200. Oh, I still don't want to pay $200. Maybe I come back in another week. Maybe they discounted $150, right? Probably don't want to spend that much either. Maybe I come back in another week and they're down $140. Okay, I can start to see where the price is, settling, right? Because you're going to have the discounts. Going for the discounts. The way we buy in trading is the same way you buy in anything else in life. You wait till it goes on discount. So that's what I want to do. I want to wait till gold goes on discount. If I'm buying up here, I'm buying too high on the curve. It's just too expensive, and the chances are the banks are going to push through these smaller time frame demand zones anyway. To go to the higher probability zone, and that's where the 1 hour lies in this instance. So hopefully that helps somebody out there. Dow Jones US 30 good for entry at the moment. Let's take a look. Samuel Trades. And then SP King says, did you guys see GU? Well, let's take a look at GU as well. So Tanaka, hopefully that helps you out on gold, brother. Gold. Okay. Got your gold there. If you need to rewind that, you can always rewind at the end of this stream and kind of go through that again. But yeah, Dow 30 and then pound US dollar. Well, let's take a look. He said, did you guys? Okay. Yeah. Pound dollar. Okay. So yeah, pound dollar. First of all, from a fundamental point of view, let me look here. So it's a neutral one. So I'm not really getting a good signal to buy or sell this thing. I'm getting 2 points on the bullish side for the combination of the big banks buying and selling and the contrarian signal from this retail sentiment. So that's a +2. But the problem is I'm getting a -2 on the technicals and then a +1 on the fundamentals. So it's just kind of too middle of the road for a longer term play. But as always, that's just the longer term play. So where's the current play? All right. Well, I got a lot of crap here I got to delete for one. So let's start with getting rid of some of these old zones. Because I haven't even looked at pound dollar for a while. Not since it was giving me a bullish signal back here. Well, we have a break of structure, don't we? Looks like we got a down move. We broke this structure, so I'd be interested to see what it does off of this demand zone for one. So what did I do? A 30-minute demand zone, I think it was. Yeah, we got this 30-minute demand zone that it's currently playing around in. That demand zone had a ton of volume, a ton of trading activity, right? You got that big red expanded range candle down here. So I'm afraid to do a whole lot of anything at the moment because I have a break of structure to the south, but I'm also in a bullish demand zone. So I need more information on this move. Okay. Are we going to close below this demand? Are we going to bounce up? We're kind of getting a little bit of divergence on your RSI. Okay, here to here. You can see that's definitely sloping up, even with lower lows. So is that foretelling a bounce up? Well, again, I need more information because we clearly had a break of structure. I mean, price was all the way up here, and it broke through all these lows. So it's kind of giving me mixed signals right there. It's kind of no man's land, if that makes sense. So we're as neutral as it gets on the fundamentals. We're bouncing in a demand zone, which should send price up with unfilled orders, but we also have a break of structure. That's no man's land. That's no man's land for me.
Absolutely.
I don't have a play.
I was staying away.
Yeah, I do not have a play. So the best thing I could say on pound dollar is, let's just see if we get a break and close down here somewhere. If we get a break and close down here, we have a down move to be found on a smaller time frame. Maybe we pull back up. Maybe there's a supply zone that forms in here somewhere that we can latch on to sell to the downside, right? But again, I don't know yet. This is literally gambling, right? This is literally putting your money in a slot machine, just pulling the handle and leaving it up to chance. So I hope that makes sense. Hope that makes sense for you, SP King. So by the time Forex Fire rolls around and at 3 a.m. Central Time where I'm located, yeah, I'll probably have a better answer for you if you're around. But either way, we'll look at it. And if you're asleep, just take a look at it on replay. Yeah. Let's see here. Discounts don't hurt the pocket. That's right, Samuel Trades. We got to go for discounts. All right? Got to go for discounts. So many times we overpay for a position, whether we're buying or shorting something, right? You want to short it as high as possible. You want to shorten premium. Going back to that example on gold, if we had a downtrend in this area, then you'd want to be selling at top. You don't want to short sell in the middle. You don't want to diddle in the middle. You don't want to short sell in the discount zone. When you sell your used car, maybe you paid whatever. But do you want to sell it for $15,000 or do you want to sell it for $20,000? Right? It's the same thing. Same principles. Same principles. But far too often we do the opposite as retail traders. Right? We're buying too expensive and we're selling too cheap. So sell your car high and buy that jacket on as big a discount as you can. Right? Got to maximize the money. And then US 30, was it? Where are we at? Oh, we got 5 minutes. So I'll do this real quick. So as far as indices go, I'm still quite neutral on them. US 30 is giving me let's see, where are we at? Dow. Yeah, -2. Okay, so it's still pretty neutral. But if we're looking at a smaller time frame, clearly we're in an uptrend. That's a 4 hour. That's a 1 hour. On the daily, we actually formed a demand zone right here. So last red candle down before this spike up, we had a gap, just a little bit of a gap from this wick to this wick, but it's a gap nevertheless. So, and obviously I always put my daily zones in yellow just so that it just tells me it's a higher time frame. And then from there, we can just go down to the smaller time frames. Okay, that's a 4 hour. I don't really have anything. I got this ugly wick right here. So this pretty much reset everything. Yeah, that wick. See, that wick just kind of ruined everything. That was the wick from the interest rate release, right? But going all the way down to a very small time frame, I think this was a 5 minute or even a 1 minute. Let me look here. Yeah, 1 minute actually. So these two boxes you see, I think are actually 1 minute zones. But I cared more about that when price was still dabbling in this area. It's at this point, it's gotten quite a ways away. So I don't know how much stock I want to put into these. No pun intended. Right. But you do have a demand here. You have a demand here. It is within the confluence of the daily zone. I feel like that confluence is too far away. So just kind of going back to the more recent price action. Okay. 1 hour time frame. So this leg went up and kind of made a new high, but I would put more stock in this area right here if this price would have closed above this area. But all it did was wick through and got rejected hardcore. That's a 1 hour time frame. Now it's going to look a little different. Actually, no, not even the 15 closed above it. So same thing. I just need some more information. You guys hear me say that a lot, and that's important, right? You have to be patient with these trades. So for me to have interest, I need price to be closing somewhere up here before it retraces, and maybe we can find a demand zone in this area for a buy to the long side. So let me just take a quick look in this area, and then I know we'll be about done. Because time flies on this show, my friend. It just flies. Okay, so yeah, so okay, we got an efficient market. Okay, there we go. There's an inefficiency right there because we have a gap right above this point. So demand zone. And the only gap I see closest to the origin of this strong move is going to be right there. So that is a potential play, but this will be negated if price just comes straight down now. I need price to go and close above these recent highs I was just mentioning. If it does that, this plays in play, pun intended. If not, if it comes straight down, probably not that interested. So yeah, hopefully that helps. You got to be picky. Got to be picky on these plays, ladies and gents. What do you think? What do you think, Alex? And then we got a wrap already here in a minute. Oh, no volume on you. The silent assassin. Well, he's getting his volume up. Yeah, I hope that helps everybody. This hour goes quick. There'll be a couple gentlemen on here in another couple hours, or 2 hours, 45 minutes, or 2 hours and 15 minutes. But yeah, that's always a quick hour. So hopefully that kind of gets you a little bit of a 30,000 foot view of the kind of how the economics work on this stuff. And, just again, discounts, man, got to buy in discounts. Stay out of the middle and stop buying so high. Alex, we're out of here, brother. Did you have any last words? No, I think we lost him. Well, in that case, ladies and gentlemen, we have reached the end of our session. So again, just if you've got a chance, come back in 2 hours and 15 minutes, and there'll be a couple other coaches doing a quiet market session. And then I'll be back on at 3 a.m. Central Standard Time in the morning for Forex Fire, where we'll just jump into some trades. So with that, have a wonderful day. Peace.
Hola Prime, trade with transparency.